Hi there, welcome to Kneppy Invest. In today's video, we are going to be touching upon one of the most impressive tech companies on the ASX, WiseTech Global. Now, this company has seen significant growth in terms of revenue, profit, operating cash flow ever since this company listed on the ASX about 6 or 7 years ago. And that impressive growth is expected to continue over at least the next 5 to 10 years because currently this company has a PE ratio over 100. And just because we know the PE ratio of this company is over 100, that means the market is expecting significant growth for this company over the next few years, at least the next few years. Now, the company did release their financial year 22 results recently. So that's the motivation behind me doing this video today. And they also gave some financial year 23 guidance. And that guidance for financial year 23, this company is expecting more pretty good growth, sort of comparable to the growth this company has experienced over the past 5 years. Now, before we get into the financial year 22 results for WiseTech, just a few facts in regards to what this company does. Now, WiseTech develops, sell, and implement software solutions that enable and empower logistics service providers to facilitate the movement and storage of goods and information through their flagship technology, CargoWise. Now, their software enables and empowers logistics service providers to execute highly complex logistics transactions and manage operations on one global database across multiple users, functions, offices, corporations, currencies, countries, and languages. Current share price of WiseTech, as I am doing this video, I am recording this video with live trading going on behind me, and the current share price right now at 11:55 a.m. on the 13th of September is $62.37. That gives a market cap of WiseTech 19.6 billion. That does seem fairly high, particularly when you look at the revenue and profit and operating cash flow of the company. So revenue of 632 million, only profit of 193.4 million. So if you compare the profit to the market cap, that's how we get 100 P ratio. So that market cap of 19.6 billion is 100 times the profit of financial year 22. So that PE ratio is backwards looking. If we do look at the forward looking PE ratio, it actually would be a little bit lower than 100. And the operating cash flow, 339.6 million. So the earnings per share of this company is at 60 cents. So again, a way you can calculate the PE ratio is look at the share price, $62.37. Divide that by 60 cents, and that gives you a PE ratio of just over 100. Now, for a company to have a PE ratio of 100, a few things have to be true. And the first most obvious truth is that this company is growing and is a quickly growing company. And that is definitely true for WiseTech. This is their revenue going back all the way to 2013, so 10 years of data here. Back in 2013, this company only had $43 million of revenue. Now it's up to $632 million. Now, this company has been acquisitive over the past few years, say 5 years. So they have acquired a lot of companies, and there is suggestions that maybe the acquisition binge is coming to an end this year, just based off their financial year 23 guidance. We'll touch upon that later in the video, but still a fair bit of organic growth here. So I'd say the majority of growth here is organic. And if we look at the last 5 years, revenue has grown at 32.7% per year. Over the last 3 years, 22%. So you might say maybe there is suggestions that revenue is starting to slow down. But if we look at the growth in the past year, it's actually higher than 22%. So maybe the revenue is starting to grow a little bit quicker right now. Now, in the next two slides, we're going to look at the statement of cash flows from the financial year 22 results. And in the next slide, we'll look at the balance sheet. So what I'm looking for here is growth in receipts, which is sort of similar to revenue, not exactly, and also growth in operating activities. So that is the net operating cash flow. And I'm also probably be looking at capital expenditure to see what the free cash flow is like. But this company doesn't spend much money on capital expenditure. Now, if you look at receipts and customers, doesn't look that impressive, only increasing from 535 million to 650 million. But when you look at the operating cash flow, it has increased from 211 million to 306.7 million. So that has increased 50%. So this company has seen a little bit of scale over the past year. The other thing to notice here, if you look at payments to suppliers and employees, it only grew by $5 million. So again, this company has found significant scale in the past year. They haven't really increased their spending all that much, yet the company has seen significant growth in their receipts, and that has gone down to the bottom line in terms of operating cash flow, free cash flow, and profit. Not much activity when it comes to investing and financing activities. $75.4 million spent on the payment of intangible assets, $70.8 million spent on the acquisition of treasury shares. And if you look at the cash or the absolute free cash flow, this company grew their cash by $164 million. Last year, they finished financial year 21 with $315 million. So they grew their cash on hand by about 50% from last year. So a lot of this operating cash flow has been fallen down to the bottom line. Now onto the balance sheet. And what I'm looking for here is any significant working capital changes. So I'm looking at inventory. This company doesn't have inventory. So that means I'm really looking at receivable changes and payable changes. And we look at both of those, working capital changes, not much difference between the two. Receivable changes up 14 million, payable changes 16 million. So they sort of cancel each other out. So if you look at the operating cash flow increasing by 50%, that is real operating cash flow. So that is the growth of the company when it comes to the cash flow of WiseTech, a 50% growth in 1 year when it comes to cash flow. And that's the reason why the market has recently really got excited about this company upon the release of these financial year results. The other reason they got excited about these results is the financial year 23 outlook the company gave. And this is the outlook, revised financial year 23 revised Ebitda guidance. So looking at revenue, Ebitda, and also Ebitda margins. So this company expects revenue to grow between 20 and 23% from last year, Ebitda to grow between 21 and 30%, and Ebitda margin to be between about 51 and 53%. So this company is still growing at a fairly quick rate. If WiseTech can continue to grow their revenue, continue to grow their EBITDAs, and even increase their margins moving forward at over 20% in terms of revenue, EBITDA, and profit, you might even be able to argue that P ratio of 100 is justifiable. The other thing I mentioned here, and I talked about this earlier in the video, that this company has been quite acquisitive in the past, but that might be coming to an end. It's just based off their second comment here. No new acquisitions not already close. So I'm not sure if that's saying they don't anticipate any more acquisitions during the rest of the year. And if they do make some acquisitions, possibly these numbers will be higher than they're forecasting right now. Now to the valuation of WiseTech. And this is probably where some people get, they lose interest in WiseTech because they just think this company is significantly overvalued. P ratio, 101. Price to sales ratio, 31. Price to operating cash flow, 57.7. They do seem a bit high. But in fact, we're going to look at the price operating cash flow history of WiseTech, I think maybe in the next slide. And based off historical numbers, that price operating cash flow is not historically high for this company. So there's always been a premium to WiseTech over the past 5 or so years. I also did a reverse DCF. And instead of doing a DCF, because a lot of assumptions, I decided just the expected growth in terms of operating cash flow or free cash flow for this company to justify the current valuations. So that gives us a number of 37% per year over the next 10 years to justify this valuation. There is a possible chance they will hit that sort of growth, but there's also a significant chance they won't hit that growth because as a company gets bigger and bigger, it does become harder and harder to grow at significant numbers. So I am unsure about whether WiseTech or this valuation for WiseTech is justifiable at this point in time. And this is the history of price to operating cash flow for WiseTech going back all the way to 2018. And you see significant peaks in the price to operating cash flow just before the COVID-19 financial panic. In fact, it reached above 100. And then during COVID-19 financial panic, it fell all the way down to 25. Recently, it has been higher, but whenever the price to operating cash flow of WiseTech gets below about 45, that might be the time to take a position in this company. And it actually reached below 45 in June of this year. In fact, it went down to 40, and then we have seen a bounce. But the price to operating cash flow gets significantly higher than what we're seeing right now at about a 60. In fact, many times we see the price to operating cash flow of this company get above 80. So that's the time to maybe think, well, the valuation of this company might be a little bit too stretched right now. I might just wait for the valuation of this company to pull back. But right now, I think there is a possibility this company will keep on growing at fairly significant, impressive rates. I'm just a little bit wary that it can grow at about 37 or even 40% per year moving forward. Now, in saying that, the share price or the chart for WiseTech looks really bullish. In fact, it went through the old or resistance level right on $60 because $60 was a previous high we saw way back in December of last year. Then we saw the share price pull back on overall tech weakness in the market. In fact, the share price pulled back from 60 all the way down to $34. And at $34 in the middle of June, and remember, June was a pretty bad month for the market and also tech companies at $34 and a PE ratio probably around about 50. This company looked pretty attractive at that point in time. But the share price has almost doubled since then. It has increased from $34 to current share price of $62. But the most important thing here is share price has moved above that old high. And that old high, you draw a horizontal line, which is portrayed by that dashed line. That's a resistance level, and the share price has moved above that resistance level. When the company did release their financial year 22 results, on that day, the share price increased about 20%. And the share price hit that resistance level and then pulled back. So it took about 3 weeks before the share price went above that resistance level. And because it has gone above that resistance level, that means there's a bit of strength in this movement of the share price. So this actually chart looks quite bullish right now just because of the breakout in WiseTech's share price. That's all I have for this video of WiseTech, looking at the financial year 22 results. Also looking at the valuation of the company. PE ratio over 100 does or might seem a little bit high, but this company is growing at a really strong rate. And if they can continue to grow at really strong rates, say between 35 and 40%, this valuation of this company definitely could be justifiable. If you have any questions about WiseTech, any thoughts, any opinions, I'd love to hear them, so leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.